Right, hi guys, Zaheer Anwari here on behalf of the Dynamic Trader. Hi guys, can you hear me okay? Can I get a quick screen check and mic check, please? Okay, brilliant, thank you. And screen is okay as well, right? We had issues last week where, there we go, no screen. I'm not quite sure why this keeps on dropping, but let's try again. Okay, is that any better? Only cursor. No screen. You mean is it black? Okay, brilliant, James. I'm not quite sure what's happening here. Okay, let me try something else. Okay, how about now? Okay, now, all right. Okay, so you can see my charts. Yeah, okay. I just want to try one thing, if you don't mind, guys. Just so that I know whether this is working or not. Okay, what about now? Can you see my screen? Yes, okay. Yeah, okay, brilliant. Okay, right, guys. All right, so I think I know what's working. One of the functions is not working. Okay, my name is Zaheer Anwari. Let's get into the trading. I'm a trend trader. I look for long-term opportunities in the market. So what you're going to see is analysis using the monthly, weekly, daily time frame. I use proprietary software to really sort of give me an edge, in the market. That edge is what we're looking for. So it's really a combination between, using long-term proven techniques and cutting-edge software that really helps to deliver on the results and the consistency and the growth on my trading accounts. Trend trading is really the best way forward, I believe, for private traders. Just simply because of the time involved. There's very little time involved. It's about letting your winning positions run. When you're trading on a shorter time frame, you're in and out of trades all the time. It's time consuming, it's stressful. And in all reality, is not really as consistent as it's often advertised to be. Okay, and it's people do kind of end up living in hope and hoping that it does work, and they may have experienced the shorter time frame trading. They may have even blown an account, yet they still go back to shorter time frame trading thinking that they just need to tweak it. It's very, very difficult to see consistency on the lower time frames. Move your trading to the large time frames. If you're on a 15-minute or a 5-minute, move up to the 1 hour or the 4 hour. In reality, if you're on those time frames, you really want to be moving up to the daily, the weekly, and the monthly. Look for moves that last for weeks to months, not for hours. Okay, if you like what you see today, then please check out the following website, which is trendtrader.pro/apprentice. Have a look at the apprentice community, and this is where we really sort of train our members in how to trend trade. Okay, right, let's move on to the chart. Let's do some analysis. Okay, guys, can you see my can you see my charts? Can you see my e-signal charts, please? Yeah. Okay, fantastic. Okay, brilliant. All right, so what you can see, as already mentioned, monthly, weekly, and daily time frames. So we have the three larger time frames. Monthly is where I have my levels of support and resistance. So you can see this. You can see this tool, the green line, highlighting major levels of support, and you can see the red line highlighting major levels of major pivot levels of resistance. There's an algorithm, there's a logic behind this, guys. These aren't just random levels. When you draw your support and resistance, that not even just your support and resistance. There has to be a mechanical approach, and there has to be logic to everything that you do in your trading. Don't just randomly plot support and resistance levels because that's where you feel there is a support or resistance level. There is logic to this, and a key point to note is that a lot of these support and resistance levels, for example, this high point here, this point here, this point here, they often happen at round numbers. So if you look to the right hand side, you've got 1.1, which is a round number. If you look at this level here, figure 1, major level of support or resistance. If you look at this level here, it's around 0.80, which is a round number. If you look at the low point here, 0.6, it's a round number. Okay, if you look at this pivot level here, 0.7. Occasionally, that doesn't happen. So if you look here, it's at 0.94. It's a bit of a random level. But on the whole, remember, trading is an art. It's not a science. On the whole, you will find these support or resistance levels around round numbers. Round numbers are psychological levels that price likes to move towards. If it breaks one round number, it usually moves to the next round number. If it fails at a round number, it usually reverses and moves to the next round number in the opposite direction. Okay, these are proven techniques. These aren't techniques that I've created. These are proven techniques. These are natural features to price that you must embrace and you must learn about. Now, in addition, I've got these pink lines. The PH, that's the highest price of 2015. That's the lowest price of 2015. That's the closing price of 2015. So I've got the annual levels. These levels are very significant because not only are they support or resistance, but they give us a bias. So if price is trading between these pink lines, we really want to be standing aside. Ideally, I want to see price trading above the high. This is where I go bullish, or price trading below the low. This is where I go bearish. If it's inside the pink lines, I apply discretion. I may take the trade. If I take the trade, I reduce my risk. But more often than not, I'm looking to stand aside. Okay, weekly and daily time frame. I've got the black lines on both time frames. That's the 200 moving average, and the blue line, which represents the 50 moving average. I want to be above the 200 and the 50 on the weekly, above the 250 like it is here. We're above the like it was here, above the 200 and above the 50. This was a strong bullish environment. I wanted to see the same on the weekly. In a strong bearish environment, I want to be below the 250 on the daily and the 250 on the weekly. If I don't have that alignment, I stand aside or I apply discretion. So looking at the Aussie dollar, US dollar, we can see that price is trading between these pink lines. And for that reason, I've been standing aside. The long-term trend is very much bearish. This was nothing more than a correction so far. What we need to see is this support level broken. If this support level is cleared, then we can see weakness to 0.60, 0.50. Long-term trend is very much bearish. It's been bearish since 2011. Now on the weekly, below the 200, above the 50. So 200 acting as resistance, 50 acting as support. On the daily, the 200 is acting as support and the 50 is acting as resistance. There is no alignment. It's between the pink lines. It's between the moving averages on a weekly. It's between the moving averages on the daily, but on the opposite side of the 200 moving average. This is just not a very good looking chart. And so for this reason, that's why you want to be standing aside from trading the Aussie dollar, US dollar. You can, of course, trade it on a lower time frame, trade it within ranges. But as already mentioned, the profit is not significant enough for me to want to be trading it. It's stressful, it's time consuming, and anything that involves me staring at the chart and staring in front of the screen all day, then I'm really not interested. Okay, trading is about being able to do as little as possible and walk away with as maximum profit when markets are in trend. Okay, let's go to the Canadian dollar. Let's have a look at what's happening on there. Okay, so US dollar, Canadian dollar. We can see that the long-term trend is bullish, or was bullish. It's now trading between these pink lines. Now, if you look at the distance between the high and the low, it's quite a significant distance. And so if you are looking to take any trades, this is where you want to apply discretion. Have you got a good entry point? Have you got a criteria that makes up an entry point within this pink lines? If that criteria is met, just because it's within the pink lines, that is not enough for me to not take a trade. What it means is that I would reduce my risk. So if price was trading above the high or below the low, I would allocate a full 2%. As price is trading within these pink lines, I've taken a trade on the US dollar, Canadian dollar, but I've reduced my risk. If we go to the weekly, we can see we're trading below the weekly 200, and there is significant distance to the daily, to the weekly, let me rephrase that. We're trading below the weekly 50, which is the blue line, but we're trading above the weekly 200. But there's a significant distance between the low of last week's bar and the weekly 200. You're looking at 2, 4, 6, 8, around 1,000 pips, give or take. In addition, you've got that 1.2 round number just there. And don't forget, you've got the pink line low, the low of 2015 at around 1.15, which is very close to where the weekly 200 moving average is. So you do have 3 support levels ahead that we need to be aware of. But if we look at the daily chart, we can see it's moving in a very neat and linear fashion. Look how neat this trend is. It's probably one of the neatest looking trends in foreign exchange at the moment. It's moving very nicely to the downside. These pullbacks are short-lived, nice breakouts to the downside. You know, we've had a pullback, but where is it pulled back to? It's pulled back to 1.3 round number. So we've got a resistance and a 50 moving average. So we've got like a zone, a cluster resistance zone here. We've got 2 levels. We've had yesterday and the day before, we've got a tram tracks formation of sorts, a bearish tram tracks. So a bearish tram tracks formation in a bearish trend. And we're now seeing weakness to the downside. So my short position has been triggered. Dynamic traders have a short position on this. This has now been triggered. I'm going to let this position run. Once it hits target, I'm going to manage accordingly. Now, when my trades hit target, I don't close positions. I simply eliminate risk and I let those positions run. And then I start looking for further opportunities to compound. When price breaks and closes below this pivot support, we've got around 500 pips till the round number 1.20. So we've got ample space. So I may look to compound again within this level between here and here. If it clears this level, then I may look to compound again below 1.2 towards the next support level. Okay, so US dollar, Canadian dollar, I am short on it, just at reduced risk. Okay, let's move on. Euro dollar. Now, if you compare the euro dollar to the US dollar to the US dollar Canadian dollar, you can see that the euro dollar is just going sideways. The US dollar Canadian dollar has been heading down. This has just been going sideways. If you look on the weekly, below the weekly 200, above the 50, look how flat the 50 moving average has come on the weekly. If you look at the area, if you look at it here, it was in a nice downtrend, and you can see that the 50 moving average was sloping down. But now it's really flattened out, heading towards 3 o'clock. And that's because it's just saying that the market's in a consolidation. And we can see the same thing on the daily time frame. Very much in an area of consolidation. Okay, we are starting to see price head up, but we needed to clear this resistance before we can really determine what kind of trend the euro dollar is in. At the moment, it's just very much range bound. And this is not an environment that I or dynamic traders will be looking to trade. We don't trade ranges. We only trade trending markets. Okay, euro pound. This is another currency that we're looking at. Now, if I start on the monthly, it's above the high of last year, but it hasn't closed. We really want to see price break and close. We then wanted further strength. We wanted to go through 0.80, break and close above this level, and then we can start looking for long opportunities. Weekly, trading below the weekly 200, above the 50, but below the 200. If this gathers strength, and if it clears this high, then we could look for long opportunities. If you look at the daily time frame, above the 200, and now above the 50. Look how flat the 50's become. And that's because it's just been going sideways. It hasn't really been doing anything for a number of days now. What we want to see is momentum to the upside. Looking for price to bounce off the 50, break and close above this level, clear 0.80, break above this high, and then we can start looking for long opportunities. So this is where that patience comes in. You know, it's what many traders find quite difficult to apply to their trading, but patience is crucial. Okay, euro pound, still waiting for a breakout. Let's have a look at what's happening on the euro yen. Okay, so euro yen, as of just like we were doing last week, nothing's changed. We want to see that 120 round number cleared. If this 120 round number is cleared, then we will see weakness to the downside, and that's when we'll start looking for shorting opportunities. below the 50, below the 200, below the 200, below the 50. So that's looking interesting. But remember, we're not just looking for the moving averages to align, we're also looking for round numbers to be cleared. So this is looking quite interesting because we're below the pink lines, so we have a bearish bias. We're below the 200 and the 50 on the weekly, so we have a bearish bias. We're below the 200 and the 50 on the daily, so we have a bearish bias. However, you can see that it hasn't trended very well. It's quite choppy, quite messy, quite an ugly looking chart. What we need to see is this trend change. If I go back in time, this was the last time I traded the euro yen, going back to 2012, 2013. You can see a very nice trend to the upside before getting stopped out. So that's what we want. We want to see price trend in this very similar way. If you compare this trend right now to the current short trend, you can see how messy it is. So what I want to see is price clear 120, and I want a neater looking trend. I don't want a choppy trend with deep pullbacks. So the euro yen, it's on the watch list, but not one I'm looking to trade just as yet. Okay, let's see if there's any changes on the pound dollar. Pound dollar, we can still see is in this long-term consolidation. We want to see price break and close below this pivot support. If it closes below this level, we can then see weakness to the downside. We're below the 200 on the weekly, below the 50 on the weekly, below the 200 on the daily, above the 50 on the daily. So you can see that price is stuck between resistance and support. Below both these levels on the weekly time frame, but until it lines up on the daily, this is not a time frame we want to be looking at. In addition, we really want to see this low cleared, 1.35. If I just open up the monthly chart, if it clears this level, 1.35, then we've got space of over 3,500 pips until the figure 1. Price likes to head towards figures. It's something that price naturally tends to do. So we want to see price move towards the figure 1. Pound Aussie dollar. Again, you can see if you were unsure about the pink lines acting as support or resistance, here you go. Price came to the pink line. We're now having a bounce to the upside. What we'd like to see is the figure 2 hold strong and a reversal back to the downside. Remember, this is not a trend reversal as yet. Look at the moves to the downside. We had 1, 2, 3, 4, 5 bearish moves. This is just a pullback or a correction for now. What we're looking for is the figure 2 to hold strong and further weakness to the downside. Right, on the weekly, we're below the 50. On the daily, below the 200, above the 50. So you can see that the weekly and the daily are actually doing opposite things. And so for that reason, we want to be standing aside. We really want to see the weekly clear through the weekly 200, and then we can start looking for shorting opportunities. Right, pound Canadian dollar, very similar to the pound Aussie dollar. You can see trading within the pink lines. Didn't quite come to the pink line to act as support. There's this pivot level, which has acted as support. Ideally, we'd like to see further weakness, and that's when we can start looking for shorting opportunities. Below the 50, above the 200, below the 200, above the 50. Again, no alignment. If price clears through 1.8 round number and the weekly 200, we can start looking for shorting opportunities. Okay, pound Japanese yen. You can see that we're trading below the pink lines. Just open it up. Price is trading below the pink lines. So price very much has a bearish bias. On the weekly, trading below the 200 and the 50. So that's looking interesting. On the daily, trading below the 200 and below the 50. So if you put it all together, below the pink lines on the monthly, so we have a bearish bias. Below the 50 and the 200 on the weekly, so we have a bearish bias. Below the 200 and the 50 on the daily, so we have a bearish bias. You'd think that this would be a good opportunity to go short if you're not in this trade. However, we've got a pivot support level here, and we've got the 150 round number. So we've got two support levels. We need to see these two support levels cleared, then we can see a potential shorting opportunity. So for now, we want to be standing aside. Okay, dollar yen. below the pink lines, so trading below the low of 2015, below these annual levels. So we have a bearish bias. We do have the 100 figure here, which is about 600 pips away. So if you do look to take any trades, just be cautious of the 100 figure. But if we look at the weekly, price has come to the weekly 200 and has bounced. Another good example of how this acts as a level of support or resistance, in this case support. Below the 50, above the 200, we had a bounce to the upside. On the daily, trading below the daily 200, below the daily 50. Yep. So once it breaks through the weekly 200, this is where we can potentially look for shorting opportunities. But guys, remember we've got the 100 figure here. So if you do take any short trades, just be aware of the 100, because 100's a strong round number. It's a figure. So we could have a bounce to the upside. So wait for the 100 level to be cleared, and then we can look for shorting opportunities. Okay, final currency we'll look at is the Singapore dollar yen. See what it's doing. We can see that we're trading below the pink lines, trading below the 80 round number. Potentially we could see weakness towards 70. If it clears this level, then we could go to 60 and 50. On the weekly, trading below the weekly 50, below the weekly 200, below the daily 200, below the daily 50. So again, looking interesting. We have alignment. The only reason I would say this isn't a very good looking chart is because it's not trending in any particular way. Look at the US dollar, Canadian dollar. Let's just go back to that for a moment. If you look at that trend, look how neat that trend is. Very neat, very linear. If I get the regression trend channel, and if I click on the high and if I click on the low, you can see, if you look at the Pearson's R value, I don't know how well you can see that, but there's a Pearson's R value of 0.978. What I'm looking for is a value of above 0.80. If it's above 0.80, that's a good trend. If it's above 0.90, that's a very good trend. This regression trend channel is telling you that the US dollar, Canadian dollar, it's a very neat linear trend. Okay, we've had a break of the channel to the upside, and that's hardly unexpected, and it's hardly something to worry about because it's broken to the upside to come and retest 1.30. We know that price has a natural feature to it, natural tendency, that is break and come back to retest it. It had a bit of a retest here. It's come back to retest it again. What we're now looking for is a bounce to the downside for price to clear this pivot support and continue. It may continue in the channel, or it may go on to create new lows below the channel, below the low of the channel. Either way, this is a neat looking trend. If we compare that to the Singapore dollar, Japanese yen, there is no neat trend there. It's very choppy. Pullbacks are very deep. It is doing lower highs, so the market is going down, but it's not the kind of structure that I would like to trade. I'm looking for neat linear trends where I can compound and where stops won't be met with deep pullbacks, and also where the journey really as a trader is very clean, very simple, and without any stress. Okay, guys, that is my analysis for today. Let's have a look at some of the questions. Hi, Joe Trader. Large forest fire last week in Canada. Oil production had to stop. It might be why the pullback was bigger. Yeah, that's fine. I mean, you could be right. I don't really take any of that into consideration, but you could definitely be right on that. It's just, if that is the case, it's already being absorbed into the market. And in all reality, in all essence, the market is just doing what comes naturally to it. What comes naturally to it is break of a round number, retest of a round number. That's all that's really happening here. But in terms of the fundamentals behind it, yeah, you could possibly be right on that. And yeah, I'm very much aware of the fire, and that is it's insane how quickly a forest fire can spread. Feel really sorry for the wildlife. Please, could you take a look on the US dollar Swiss franc? Yeah, I can have a look at the US dollar Swiss franc. Let's have a look at that. US dollar Swiss franc, if you look at it on the monthly chart, okay, I'll put it out to you. Looking at the monthly chart, a yes or a no? Looking at the monthly chart, it's just going sideways. It's not really something that's worth trading. So This is why I would dismiss it instantly. What we're looking for are trends. If I just open up the chart, what we're looking for are trends to the downside. There's a nice trend. There's another nice trend. There's another nice trend. If you look at what it's doing at the moment, it's just going sideways. So this is not really I'd be looking to trade anytime soon. Okay. And if you look on the weekly, flat, moving averages are flat. If you look on the daily, flat. So the US dollar Swiss franc from a trend trading perspective, not one that I'd be looking to trade. Okay. Please share the chart. Has it been dropped again? I find this really frustrating. I'm not sure why it keeps on doing that. Can you let me know if you can see my charts now, please? Yes. Okay. Yeah. Okay. So you can see my charts. All right. Okay. So looking at the charts, there you go. Just in case you missed it, monthly, just going sideways. Nothing really much going on there. Weekly, you can see the 50, the blue line, the 50 moving average is flat. 200 moving average is flat. Daily, 200 moving average is flat. 50 not really going in any particular direction. It's all very flat up and down. You can see from price that it's just very flat. Guys, let's have a look at this. This is, if you look at fundamentals, right? Look at what the market was doing. It was just going sideways. Then we had that day where the Swiss National Bank removed the peg against the euro, and we had that crash. Price fell like 3,000 pips or whatever it was. But look at what's happened since. Price has just gone back into that range that it was trading in before released the peg. What does that tell you? What that tells you is that noise is usually a short-term impact. News is a short-term impact on the trend, and the market is all powerful. The charts tell you everything that you need to know. Don't get caught up in the fundamentals. Look at price. Let price dictate to you what to do. Please. Okay, so I think I've done that. Large forest fire. Yep. Okay, guys, are there any final questions, please? Before we, yeah, you're very welcome, guys. Thank you for the question, Joe. Any other questions, guys? No? Okay, well, if there aren't any questions, my conclusion, and I think most of you guys have probably figured out the conclusion, is that from a trend trading perspective, I haven't taken any trades, and I'm not looking to take any trades until we get breakouts. You're very welcome, James. Thanks for coming in. Really appreciate that. For now, standing aside, hopefully on next week's webinar, we'll be looking at something a little bit more interesting. You know, hopefully we'll have seen some moves and some breakouts. So let's hold tight until then. Okay. In the meantime, guys, if you want to get involved in the training, as already mentioned, please check out The Apprentice. If you haven't read the ebook, /ebook. If you want to know more about the technical analysis that I've just done, and if you want to know how to break down a chart, please check out this ebook. It's totally free. Okay, it's a free ebook, and it's a great place to start if you want to move your technical analysis onto a larger time frame. Please go to facebook.com /the dynamic trader for our Facebook page. If you haven't caught up on any of the Facebook lives that I've done, I've got a whole load of Facebook live recordings somewhere down here. There's a ton of recordings, okay, on various aspects of trend trading. Please follow us on Twitter @Dynamic Trader, and please add us on Periscope. Okay, if you haven't downloaded the Periscope app, guys, I recommend that you do download the Periscope app and follow us on @Dynamic Trader. I do Periscopes at least once to twice a day, sometimes even 3 times, depending on how much time I've got on that particular day. Okay, guys, is it possible to use the lower time frame? Anything to do with lower time frames, 4 hours, 1 hour, it's very difficult to replicate what I've just shown you on a lower time frame. It's not impossible, it's just very, very difficult. So if it's difficult, why make it more difficult for yourself? Trading is already a challenge, even when you're on the larger time frames. Think of the logic, guys. Think of the logic as to why people are trading on lower time frames. The reason why people are trading on lower time frames is because they want to make money. Get away from thinking about money and you want to think about in profits. You want to think about long-term growth. Trading on a lower time frame is very appealing. I understand that, because you're going to make money in a day, and what people are trying to do is replicate their salary, whatever salary they've got at work. That's why they're trading on a lower time frame. They're trying to target their salary. Trading is not a 9 to 5. What you want to be looking at are the techniques that already work. The way to look at this is this: the difference between trading on a larger time frame and the difference between trading on a lower time frame is that larger time frame trading, you're the casino. If you're trading on a lower time frame, you're the punter. You're the person that goes into Las Vegas for a day of trading. Casinos are always in profits because they have multiple tables, they have the odds in their favor, and at the end of each year, they'll be losing profit, but on an annual basis, day-to-day traders will, day-to-day casinos will be losing money, but at the end of each year, a casino is always in profit. And that's how you want to be thinking. Be the casino, don't be the punter that goes into the casino. All right, and that's the difference. And where that logic comes from is this: larger time frame trading is predictable. Lower time frame trading is unpredictable. So it's not only already difficult, you're then also dealing with the unpredictability of the market. Why make it difficult for yourself? Move up to the larger time frames. Okay, thank you all very much for your time. Thank you all for tuning into the webinar. I'm going to be doing my own personal webinar later on today at 6 p.m. GMT. If you go on to Twitter, if you follow me on Twitter, you will see you will see the link to register for the webinar, which is at 6 p.m. This evening. So in what time is it now? 4:35. So in an hour and 25 minutes, I'll be doing my own personal webinar where we'll be looking at some of the currencies. I'll be showing it slightly different tools and just touching on stocks as well. Okay, guys, thank you all very much, and I will see you all on next week's webinar. Take care. Thank you. Bye. Thanks, Adinda. Bye-bye.